3 things you should ask your lender about. Okay, so what we're gonna be talking about is what I go over in every client call. So with our process, once you're fully underwritten, you and I sit on the phone for 30 minutes and I go over 3 big things. Are you ready? Okay, now if your lender's not doing this and they won't do it, dump them. Dump them. There is no reason to be with a lender that won't do this. And people sometimes go, well, I think they're guys, I'm really busy and I set out time. Like I am time blocked to do this because this is critical. So if your lender says they're too busy to do this, dump them and come to me, okay? There we go. Number 1, what is your debt to income? Yes, so I always like to go over debt to income with clients, and it's for a variety of reasons. Now, first of all, what is your debt to income? Well, there's a front end and a back end ratio. So the front end is the housing payment versus your gross income. So your gross income is before taxes. Your back end is your housing payment, not your current one, the new one, your housing payment, your minimum monthly credit card bills, the auto payments, student loans, all of that stuff versus your gross income, okay? Now, the reason I think it's really important to talk about is because as a lender, I can qualify you to some pretty high ratios that can make day-to-day living incredibly unrealistic. It's true. That's every lender. The guidelines with most loan products can get you into trouble if you don't understand where you are. So for instance, you know, if your debt to income on the back end is at 20%, that means that all your debt is only 20% of your gross income. That's gonna leave you money for food, for going out, for saving, for vacation. You're gonna have money left over. Now, if your debt to income is 55 or 60%, that's not necessarily going to leave you with any money, because remember, this is off of your pre-tax income. Yes, so if your pre-tax income, let's just say it's $10,000 and your housing payment in debt is $6,000, you're thinking right now, well, that's $4,000 to live on. That's a ton of money. What's wrong with you? No, guys, that's before the government sticks their hand in and claws out your money. That's before health insurance. That's before Medicare. That's before Social Security. That's before some tax that they made up that I don't even know what it is times 12. Okay, so it's really important that you know your debt to income and the lender talks to you about it. Whenever I have someone, because with certain loans like VA, FHA, you can definitely go that high. So if I have someone pushing that limit, I have the conversation of, hey, this is where your debt to income is. You really need to do a budget. I'm concerned about this. You know, let's talk about this payment. I think you'd be happier here. Now, sometimes someone will say, oh, well, but you know, my boyfriend lives with me and he's going to pay half the bills. Okay, right? You can survive at that level. If he leaves, it's not going to work. But you see what I'm saying? Sometimes there's stuff, you know, we might have a 60% debt to income on a VA loan, but we don't have a spouse on the loan that makes $100,000, right? Okay, that might make sense. But if we're using everyone's income and the debt to income's that high, it can put you in a bad position. So it's really important that you're talking to your lender about where your debt to income is, because if you're in that range, I would argue of like 48 and above, you need to do a budget. Honestly, I think everyone should do a budget, right? Because look, you could be at a 30% debt to income, but you could like Louboutins. I don't even think I pronounced that right. You could have spendy taste. We don't know. That's the key thing. We don't know. I was talking to a conventional buyer recently, so not a government loan, you know, just 5% down, conventional is what it's called. And I was like, guys, your debt to income is really low. And they were really uncomfortable with the payment. I'm like, what's going on that I don't know? They're like, Jen, we have 2 kids in childcare. It's $3K a month. And as soon as I pop that $3K in, because as a lender, we don't count that on conventional loans. The only loan that childcare comes into place is VA. As soon as I popped that in, it was like 65%. Of course they weren't comfortable with that payment. With the debt that we didn't know about and we're not supposed to ask about, right? It was given to me. That's why I did the numbers with them so we could talk about it. That is why they were so uncomfortable. So assuming that whatever the lender tells you, like, you know, oh, your pre-approval letter is for $650, go shopping. No. So number 1, debt to income. Number 2, monthly payment breakdown. Yeah, that's important. So a lot of times people don't even know what their monthly payment is. They have no clue. No clue. The lender never tells them. They and this happens a lot. The reason I don't do this is because this happened to me. Before I was a lender, this happened to me, and it led to me being house broke, and it sucked. So what will happen a lot is you meet a realtor. Oh, I love you, Betsy. Betsy refers you to Jonathan, her lender. Jonathan, you give him all your information. Jonathan gives Betsy a letter to go shopping with. You never talked about your debt to income. You don't know what your payments are. Betsy's just telling you to come shopping. No. Wow. Sorry, it's a little passionate. I'm a little bitter about being housebroken in my youth, guys. No, you need to know what your payment is. And you need to understand that taxes and insurance, we are estimating, okay? And I go over that with everyone. I say, hey, look, here's where we are. Here's where current rates are. Most of my loans are locked by then, or I'm locking them for that lock and roll so people can lock and shop and feel comfortable. Here's your principal and interest, right? That's the mortgage part. That's what we control, the lender. Here's what I have for insurance. But guys, insurance can vary dramatically. Like I tell everyone, it could be $50 a month. It could be $1,000 a month. I don't know. It's going to depend on where you buy, the age of the roof, the age of the electrical. Does the prior owner have any claims? What's your deductible? What insurance company do you pick? Because there's huge variances there as well. There's too many factors for us to be accurate. So I always urge my clients, guys, when you're going shopping, if you really like a house, get a quote, right? You can get online quotes in minutes. Just make sure with these numbers that I gave you that if you put in that number instead, you're comfortable, okay? How long did that take me to tell you guys? Less than a minute. Trust me, it will change the way you look at this. Like, I don't understand why people don't do this. Okay, taxes. Right? Property taxes, that can vary as well. Like let's use Texas, for example. There's certain developments in Texas where the property taxes are 1%, 1.5% higher than a development across the street. You've got to watch out for that, So if a lender says, oh, and if you're dealing with a lender out of state, and yes, I am an out of state lender, but I check taxes like a crazy person. But if you're dealing with a lender out of state that doesn't really pay attention to taxes, they're just going to put in whatever they think taxes are in the state they work most in. They're not going to understand that every single county and state are different, and they are dramatically. There's like California, for instance. As soon as you buy a house, it gets reassessed at the higher value. The rest of the country doesn't really do that. Okay, it's whatever the current taxes are, and of course they can reassess, but there's different ways that it works. New construction, right? They reassess as soon as you buy that, but you need to understand, hey, these are what's going into the payment. Now, the other reason you want to know this is because you might go look for a condo, but they approved you for a single family home. Condos have homeowners associations, so that changes the numbers in the debt to income. So you want to have this payment conversation. Now, what I'm always asking people is, how do you feel about this payment? And if they go, ooh, I'm not, I go, okay, let's bring it down. What would you be comfortable at, right? And I bring it down. And then we go, okay, this is what you can buy it, what you're comfortable with, and this is what you should focus on. If you want to go above that, do a budget to see if your initial reaction was right, or if you do have some wiggle room. Okay, very important. I can't stress this enough. So debt to income's number one. Number two is payment. Number three, closing costs. Oh my God, why do lenders make it such a mystery? Seriously, I get the calls all the time where they're like, the lender won't tell me what the closing costs are. And I'm like, what? Why? Like, look, we're estimating, but if you have an application with us, let me tell you what I have to do. Are you guys ready? I don't want you to be overwhelmed. So if you do an application, you're fully underwritten, I push a button, that pulls fees. One button. Okay, guys, I work at Guaranteed Rate Mortgage, so if anyone's ever telling you they can't estimate closing costs and you have an application with them, it's a button. For real, it's a button. And then I go through it, I tweak some of it, right, to make sure it's appropriate. But then I go through it with them line by line by line. And I'm saying, this is set. This won't change. This can change. Here's your wild cards. Here's what to expect. okay? And, you know, a lot of times lenders go, oh, well, they've bought a house before, they don't need to go through this. Everyone should go through this. I don't care if you've bought 50 houses, you and I are gonna be on the phone, we're gonna be going over it. Different states, like that's been such an eye-opener for me, is just the variance state by state by state in closing costs can be very dramatic. You know, if you bought a house in Ohio and now you're buying in New York, you're gonna be shocked, for real. It's a different world. So your lender really should be going through those things with you. And if they're too busy too, that doesn't make sense. It really doesn't make sense, okay? I know how busy most lenders are. They have the time. Now, if they are very evasive about it, or they just don't want to get nailed down on anything, you have to ask yourself, why, right? Why are they so scared to talk to me about this stuff? Generally, it's going to be because they have high rates and high fees. That's generally why. Because why else wouldn't you talk about it? It's literally my job. It's a lender's job to tell you guys this stuff. But there's this huge thing in the industry where most first-time home buyers, or even most buyers, don't know what to ask, and they don't want to look stupid. You guys never look stupid. I want you to know that right now. If you have a question that you've been dying to ask about mortgages, but you're like, ugh, too embarrassed, call me. I love those. They help me so much because, and they're never stupid, but they help me because that helps me educate you guys, right? Because I can think about how you're thinking. So if a lender won't do these 3 basic things with you, why are you giving them your business? I can't stress it enough. And the reason I'm being so passionate about that is because I get calls really close to closing where someone's like, I think this lender's ripping me off. And I look at the documents and they're being ripped off. 100%. And this all could have been avoided if day one they said, I want to do these 3 things, and they made the lender do it. And if the lender doesn't do it, walk away. Okay? I know. It's like those your boyfriend's bad carols on TikTok. I don't know if you guys have seen. Anyways, it's like that. It's a red flag. So look, I hope that you guys are working with a lender that goes through all of this with you. If you're not, and you're like, Jennifer, can I just, yes, you guys, I am the one that does those calls. That is always me. That is what my day is spent doing, is doing those 30 minutes, sometimes longer calls where we go through those things. We talk about what the underwriter said about you. We look at the houses you're looking at. We talk about real estate agents. That is you and me. That is not you and some stranger. That is you and me. So as always, I'm licensed in 48 states, everywhere but Rhode Island and Utah. However, one of my good friends is licensed there. She just got licensed there. She's awesome. So I'm always happy to give you guys her information because I know you'll enjoy her as well. But the key is I want you guys to be educated and empowered. And there's no way you can purchase a house and not have those 3 pieces of information and be educated and empowered. So thanks for watching, guys.